Managing Asia. I'm Christine Tan. My guest today is one of the best-known entrepreneurs here in Thailand. He built up the biggest listed food and hotel operator in the country, and now looking for a slice of opportunity abroad. He is Bill Heinecke. It was like meeting an old friend. Bill Heinecke was warm and welcoming, but he was also in a hurry, signing papers and slotting in meetings between filming before flying to the Maldives the next day and Australia the following week. This has been the big change for the founder of Minor International since we last spoke 5 years ago. Today, a quarter of the group's revenue comes from abroad, but Thailand remains the staple, serving up 28 billion baht of revenue last year from food chains like the pizza company Sizzler and Swenson's, and hotels like the Anantara and Four Seasons. But the country has been through some tough challenges in recent years.
We did suffer. Profit-wise, our profits fell for 2 years as a direct result of the airport closure, the political instability, and finally the floods, which we just passed earlier this year. So those three things really did have an impact.
Since coming to Thailand and creating the country's biggest food and hotel group, Heinecke has steered it through many crises. He rebuilt the pizza business from scratch after losing the Pizza Hut franchise in 2000. And in recent years, he had to deal with a loss of income from political unrest and floods in Thailand. But these events have made the company more resilient, according to Heinecke.
What it forced us to do is focus much more internally on strengthening our systems and our organization, bench strength and what have you. And the result was that we still closed last year, in spite of everything, with a record year.
But you weren't delivering pizzas on boats?
We were, as a matter of fact. Some of our people, they're very creative. They were empowered to do whatever it took to keep their businesses running, and they did. And they did a fantastic job.
Despite the odds, Minor dished out record profits of 2.8 billion baht last year, sweetened by earnings abroad. Have these events made you more cautious about putting too much money, investing too much money in Thailand? Has it accelerated your push overseas?
Yes and no. Do I have any less faith in Thailand? No. I'm convinced that Thailand is still one of our strongest markets and will remain our strongest market. It's our home market. It's a market we know best. We're confident of it, and if you study history, Thailand has survived much greater dramas than what we've seen, and it will survive, and it will be a strong market. However, being a public company, we're always under pressure to grow earnings and to be as stable as possible through any situation. So what we found...
So you're finding that stability overseas?
That's right. We've invested much more overseas recently, and that has resulted in stabilizing a lot of our earnings. So if you were to look at this last year, a large part of our earnings came from Australia. Basically, it helped us to achieve a record year in spite of a difficult year in Thailand. And this year, we believe we can achieve again a record year because of the tremendous success of our offshore investments, as well as the success that we're seeing coming from our Thai investments.
What exactly is your overseas business model?
Opportunistic, I would have to tell you. Certainly we had an opportunity to move into Oaks, which was a very major acquisition for us.
How did you spot the opportunity? How did it come up? This was a company that was struggling with debt.
It was struggling with debt, and that's one of the things that we're very strong at. We have a very large equity base, and we could solve their equity problems very quickly. But the underlying business of Oaks in Australia was very sound, very solid. And so when we stepped in, we were able to quickly stabilize that situation, and their profit contribution to us last year was significant. We already were operating in Australia with the Coffee Club. We've bought nearly 300 restaurants which are part of the Coffee Club operation. We own 50% with our partners of that operation, and so we already felt very comfortable in Australia. But our international strategy is one not only of being opportunistic, but it's also of clustering. So we tend to try to build in areas where we can reinforce ourselves. So Australia, we've got food and hotels. We've moved into Sri Lanka. We're one of the first companies to move into Sri Lanka since peace came, and we have a number of hotel developments there. So this is the way that we've tended to put our resources and not just spread them wildly around the world with one flag in South America and one flag in the Americas and one flag in Europe. We have nothing in the Americas, nothing in Europe at this time.
You talk so much about Australia, so potentially how much could Australia contribute to your overall bottom line revenue?
This year, probably it'll be about 35% of our EBITDA will come out of Australia. And that's a significant amount from 3 years ago when nothing came out of Australia. So we have a lot of confidence in Australia. But that doesn't mean we're focused only on Australia. We're still looking elsewhere. We're very excited by opportunities that we see in Japan because its pricing has gotten very realistic.
What do you like in Japan?
Personally, I like the skiing. And,
so buying a ski resort?
Well, that could be an interesting idea. We're certainly looking at that opportunity. But the key thing is that Japan, the values have just gotten so realistic. Really like the United States. Where we find values not being realistic is still in Europe. And with the problems that the economy is
facing. So you're
facing.
actually scouring for deals in Europe?
Oh, yes. We're always looking at deals all over the world. You know, our team looks at something like, I think, 100 deals a year. And we usually close 3 or 4, so we don't have a tremendous batting average, but the deals we tend to close are good ones, and hence the results that we've been able to produce.
What sort of cash do you have on hand right now, and what sort of acquisition size would interest you?
On hand, I couldn't tell you the exact amount. If I checked my wallet, I might, but I think
you know what I mean.
Yeah,
though.
I know what you mean. But I think we're certainly comfortable in the probably in the $100 million to $300 million range of investment acquisitions. So that gives us a reasonable size to play with, and we're always looking at 1 or 2 large deals. You know,
how large?
I think we're looking at one that's in the 200 million range. Whether it'll materialize is another story.
What category is it in?
We actually have one in the hotel category and certainly one not quite that big in the food category that we're actively always pursuing.
How much do you intend for these foreign businesses to contribute to your overall bottom line? Do you have a projection in mind?
I think overall we'd like to see half of our business coming from outside Thailand, but Thailand is still growing. Don't underestimate Thailand. It's growing quite dramatically. So trying to get our overseas ventures to keep up with the growth that we see in Thailand is not that easy.
But it could potentially overtake your Thai market.
It could, but I think we're so well entrenched here and we've got such a large base, and this is our headquarters, and so we see more opportunities in Thailand than we do elsewhere. You know, we're not afraid to embark on startup exercises here, which, you know, new hotels or what have you, as we're about to do with a project called Avani, and we did recently when we finished the St. Regis Hotel. So, you know, we as a company are committed to Thailand and aren't afraid to make long-term investments.
You're listed in Thailand as well. Any plans to explore listing elsewhere?
I think that would certainly be on the cards, that we always continue to look at it. Whatever will add or help us with shareholder value, we'll consider. You know, many people have also said to us, you know, why aren't you a food company and a hotel company? I think, you know, that's not unreasonable or not unlikely. But today we're finding that a large part of our strength comes from the size of our organization. We've grown to over $1 billion in revenue, and that's really helped us to be a reasonable sized business rather than 2 smaller businesses.
For the sake of argument, where would you list?
I think we've felt and learned over the years that if you don't have a market cap of at least $1 billion, you're not followed by the big investment houses and what have you, and it's hard to get the traction needed in today's world to get financing, to get credibility when you make an acquisition. So we wouldn't want to list or split if we were less than $1 billion, I think. I think our plan calls for us in terms of market capitalization to reach $5 billion within the next 4 years as a market cap. Considering we're just approaching $2 billion now, which is almost where we were in 2008 before the Lehman crisis. You know, we feel pretty confident that we can make it, and that would then open the door to having more than one company at $1 billion.
Don't go away. Up next, Bill Heinecke from Miner International tells us why he's still facing difficulty cracking the China market. Managing Asia will be right back. Welcome back to Managing Asia. My guest today is Bill Heinecke, the face of Miner International, Thailand's biggest food and hospitality giant, with ambitious plans to double its size in the next 5 years. Bill Heinecke has a huge appetite for fast food, building an empire that has become the largest in Thailand. And he has been moving up the food chain from franchising to creating his own brands such as the pizza company and hotel chain Anantara. So what's his recipe for launching brands?
We're very opportunistic, and when we see an opportunity opening, then we move for it. We saw an opportunity to create our own brand with our own unique indigenous look and feel that we could take not only in Thailand but abroad.
The tireless entrepreneur has since started another hotel chain, Avani.
This is as good a competitive market as any to feel our oats out and to test the skills of our people.
Have you ever gotten it wrong?
Oh yes.
Like what?
I think we've tried chicken and we've failed, but I'm sure we're getting ready. If we ever do chicken again, we're gonna be a lot better at it. We've going back years, we've tried donuts in Malaysia and we've failed, and there's a number of things, but I tend not to focus on those, and people never remember them. One success covers up a multitude of blunders.
These brands that you create, how much do you intend for them to make up, to contribute to your overall revenue and bottom line?
To me, the greatest strength of our company today is the intellectual property that we own. It's not the brands that we represent, and that's where the growth is, and that's not on our balance sheet. You don't see that anywhere. It's really one of the hidden assets, you could say, of our company. And as we keep making it more and more successful, the value, in my opinion, of the company goes up dramatically, even though there's no reflection on the balance sheet.
Creating these homegrown brands, is this a way to offset any difficulty coming from securing rights that you already have in Thailand to expand elsewhere? For instance, you already have rights for Swensons and Sizzlers, and you also have management contracts for hotel chains like Marriott and Four Seasons. Is this simply a way to help you expand overseas? Is it simply easier to do so for you?
No, I think it's just that we've driven and helped drive many famous, world-famous brands in this country, and my belief is my next chapter in the book, you might say, is really to develop and drive our own brands, because then we own the intellectual property. We can control our destinies on that. We can take it anywhere in the world. The world becomes our oyster. Right now, when we're dependent on other people's brands, we can only go where they allow us to go or where there's an opportunity.
I detect a certain amount of frustration there.
No, not really. Thailand was always my home, and when time came to move out, it was much more natural to move with our own brands than it was with somebody else's brand.
But you've tried.
Yes, we have tried in the earlier days.
Difficult.
And there's no guarantee of success. Absolutely. So if there's no guarantee of success, then I think I'd rather try it with my own brand than I would with an international brand.
Let's talk about China. The last time I spoke to you, you've expressed how difficult it was to operate in a market like China. For the first few years, you've lost money getting your strategy right in China. Have you managed to crack the China market?
Not yet. We're still losing money, but we're now profitable at the store level in our restaurant business. But since that time, we've also expanded into the spas. Our first couple of hotels are opening. So the cluster concept is happening. And if you ask me, I'm pretty confident that China, as a unit, will be profitable probably next year.
Really?
Because we have so much in China. You'd have to take the whole China picture. And if we get the acquisition that we'd like, I think we could make
Why is it taking
China
so long to make money in China? What's the difficulty you're facing?
I don't know. Everybody I talk to is having a hard time in China. China's not that easy. The playing field, I find, is not really that level. Because, unless you do business the way the Chinese do business.
And what is the Chinese way of doing business?
Well, the Chinese way of doing business is they very often have better arrangements on rentals. They may not take the same strategy that we do in terms of people and looking after those people in the same manner. We take all of our responsibilities to our investments and our people very seriously, no matter where we are in the world. But in China, in a home market, very often some people play the rules differently. You can, even in this market, I think as we've seen with many outsiders that have come in, they get very frustrated because if you don't know your way around how to get the best deals or where to go for certain things, you find yourself competing on an unfair advantage against some of the local companies.
So do you think now you kind of know the China market and you kind of cracked it a little bit?
Well, we certainly spent enough money learning about the market. I think we're now...
It was a valuable lesson.
It's a valuable lesson. All my lessons, I didn't go to university, but believe me, I paid one of the most expensive educations I think anybody could possibly have with these lessons.
You've brought pizza companies, Sizzler, and I think Thai Express as well to China. What are some of the challenges you continue to face in the food sector as you can expand?
I think it's really learning the individual markets, because each market in China, it's a huge country, is a little bit different. And then it's also building the bench strength the people strength in these markets. And then comes to things like in the food business, especially logistics, become a very important part of the whole equation. So all of those things really means that if you're going to go into China, you better be prepared to lose money, and you better be focused, and you better stay there for the long term. I don't think China is one of those markets that you can sort of jump in and instantaneously have profits. So we're still working on it, but we're pretty optimistic.
That's the food side. On the hospitality side, you've made some headway managing your own hotels, the Anantara brand, in 3 locations. But every major hotel chain is investing and expanding in China in a big way. How do you compete with all these bigger players?
Well, I think that not every brand is investing that much, because you take the big international brands, the Marriotts and the Starwoods, they don't really have investments in that thing. They're primarily investing in people, and that's what we're doing. And we're managing. All of the hotels that we've currently signed are all management agreements. Would we invest in China? Yes. If the right deal comes along, we would do it. But it's got to be the right deal. And we have the same view about the Middle East. Right now we only manage hotels throughout the Middle East because we haven't gotten the right deal or opportunity. In other instances like Africa and the Maldives, we've invested our own equity into our hotels because we could get the right deal. We don't own
the right deal?
The right deal is really where it's the old way of I like to call it the old way of making money. It's where you have a hotel and it makes a profit after investing into the purchase of the land or the lease of the land and building a hotel. I was just in Monaco the other day and looking at a hotel, and it was $50 million to buy a 50-room hotel, and it did $200 a day. Well, by all equations, these don't work. You've got to get about 0.1% of your investment cost as a room rate. So if you invest $1 million, you got to get $1,000 a night. Well, when you're not getting that, you're not going to make it. And there's a lot of markets that don't make it. The only reason they survive is because of speculation. London is a prime example. Again, Monaco is another example, where they're all speculating that the land values will go up, but the actual business doesn't pay for itself.
Is China another example?
Yes, China has some very expensive real estate, and as a result of that, it's held us back. So unless we can get the right deal on real estate, which we have been able to get in Thailand, we have been able to get it in Vietnam, we've been able to get it in many of the markets, we can't make the numbers work the way we want them to work, the old-fashioned way, not with the hope that real estate values are going to rescue us. And they've rescued many people. Frankly, the values in London and Europe and China have gone up so dramatically, so quickly, that even if you had a terrible business, you could come out of it. We don't own any real estate, even with our food business. Had we owned the real estate, we might not have had these losses, because we would have made so much money on the real estate. But we operate purely a food business.
You worried about a slowdown in China?
Am I worried about China slowing down? Not really. That's on the least of my worries. Am I worried that there will be an effect or something will happen in China over the next 10 years? Yes, I think we haven't seen a country yet that didn't have a problem. Whether it's the US or it's the UK or it's Thailand or it's Asia, you've got to expect problems to happen. And when I look at problems, to me, I never worry about the ones that I've experienced. I worry about the ones that I've never experienced. The world has never yet experienced a slowdown in China. When it happens, and it probably will happen someday.
What's your contingency plan?
Our contingency plans are only on what we've already experienced. So there it's been very, tsunamis, we have great contingency plans. Political instability, we had great. Now for floods, we're ready. We're ready for everything that we've ever experienced. What we're
but you're not ready for a slowdown in China?
Nobody's seen that yet. We haven't seen what will happen to the rest of the world if that ever occurs, or when that occurs. So to me, it's hard to prepare for.
Up next, Bill Heinecke of Miner International tells us why his risk appetite has changed over the years. Managing Asia, we'll be right back. Welcome back to Managing Asia. My guest today is Bill Heinecke, founder, chairman, and some call him the rainmaker of Miner International. He ventured into business when he was just 18, now one of Thailand's wealthiest, and running the country's biggest food company.
You founded the company in 1968. Today, Miner International is one of the biggest hospitality and leisure companies in Asia, with more than 70 hotels and resorts and more than 1,000 restaurants across the region. Looking back at your journey as an entrepreneur, how much of that is based on gut instinct?
Unfortunately, a lot of it is based on gut instinct, because it's what I often call pedestrian observation. It was really observing things that were missing in Thailand that were in the rest of the world. And we just started bringing them, whether it's fast food or hospitality or fashion or some of the other things that we did. You know, in 1968, the only reason we're called minor is because I started the company as a minor.
You were a minor.
I was a minor at that time.
Any plans to change that now that you're no longer a minor?
Well, that's right. If I'd been a little older at the time, I might have called it major. It would have sounded a lot better. But anyway, that's, you know, when it started. But, you know, I also have to remember that we started this company with $1,000 in borrowed money. It wasn't even mine. I borrowed it from someone, and if you think interest rates are high, as they have been from time to time, believe me, I was paying 5% interest in those days per month. So everything, interest rates to me are really cheap these days.
What sort of risk do you take on any sort of business? What's your risk appetite like?
As I get older, it seems to be getting much less. You know, and when you have something to lose, you know, there's no question that, you know, when you're starting out in life, you have so little to lose that you're more than willing to take a risk. You know, today, as we have so much, and we have a responsibility to so many people within the group, that our risk appetite is very limited. We don't like to take risks. There's no incentive from our shareholders to take risks. You know, it doesn't do anything to our share price when we make a mistake or do something. We're already penalized when the country makes a mistake. If it has a change in government or you know, anything that happens, a financial crisis, we get penalized already. That's enough. So I don't really want to have any more penalties from making bad investment decisions.
You're 62 years old, renounced your U.S. citizenship about 20 years ago, made Thailand your home and headquarters to your company as you expand aggressively across the region. How much of your management and leadership style is influenced by the many decades you spent here in Thailand?
A great deal. We're very much a Thai company, yet we think about good governance. We think about all of the things that we're judged on by a Western world and by Western investors, because a large part of our investors are from abroad. You know, the Thai culture is unique, and I think maybe that's one of the reasons why it's never been colonized and why it's been so successful. You know, Thailand's been doing business for 2,000 years. I think there's more to be gained from that than probably anything else. You know,
have you fully mastered the Thai language?
Oh, no, not by far. I know enough to get me into trouble or out of trouble, depending on the circumstances. But on the other hand, my wife, my children, my grandchildren, they're all, you know, much better than me. They can read and write it, and they're fluent. So they're all much smarter than me.
What are you doing about succession planning? I understand your son works in one of your subsidiaries. Are you grooming him to take over?
I think, you know, it's not so much me grooming him to take over. I'm not sure he wants to take over. But he's doing a great job in the food business, which is where his heart lies. And he's been very much involved in both China, now with the Sizzler operation, and the Sizzler operation here in Thailand, and to a lesser degree on Burger King. But, you know, succession planning for us is absolutely critical. And where my focus has been on building bench strength. Each of our business units has a very strong CEO. I sit as chairman today, and perhaps the rainmaker in some cases. But our business units are very rapidly becoming their own rainmakers. Our hotel business is busy growing in directions that even further than I had ever dreamed. You know, the food division is off building new restaurants in places I've never been to. So, you know, this comes from great leadership, and that leadership isn't necessarily me anymore.
And finally, as chairman and founder, you're still actively involved in the company. You're not ready to step down yet. What sort of ambition do you have for Minor International? What sort of business empire do you want to create here?
We'd like to see a market cap something closer to $5 billion rather than the $2 billion that we're at. And we think we've got the foundations in place to achieve that. And when I say foundations, I mean we have the people that we need to go there.
So no plans for retirement?
Not as long as I'm having fun, and as long as I'm still learning something. You know, every day I still feel I learn something in this business. I learn something from the people that we work with. I learn something from the people that I come into contact with and the companies that we work with. And so for me, that's very satisfying.
But retirement would give you more time for formula racing, would give you more time to dive with the sharks. That's something you love, isn't it?
I love those things, and I try to still do them, and I keep a good balance. Much to the horror of my board and some of our staff, I still spend a great deal of my time doing the things that I like doing.
And I've been speaking to Bill Heinecke, Chairman and Group CEO of Minor International, based here in Thailand. Hope you've enjoyed the program. Join us again next week with more leadership insights here on Managing Asia. I'm Christine Tan. Thanks for watching.